So this video, I'm basically going to go over the trade that I took today on the 20th of November, 2024. Um, Coming into this day, we would have been bearish. Okay, so I know we had this sweep down here and price ran back up. We didn't close above any of these areas, yeah. So to instigate price going higher, we did just close over this FEG. So realistically, looking on a daily chart, we could see and maybe be predicting a bullish price move. Okay, when you go up time frames now to the weekly, we've had back-to-back weekly internal to external moves. Okay, we still have this draw all the way down here. That's our external range on the weekly. I don't have it marked out because I don't need to mark it out for my own personal use. It's too far away from where price is for me. So for me, I just put this previous week's low as the external range. So with that in mind, take that off. With that in mind, this is how we was looking at back-to-back weeks. We're expecting this week to be bearish also. So looking at the daily now, we have pushed higher on Monday. Tuesday, we took Monday's low. Okay, so we haven't really done much in terms of looking for our bearish bias at this point. Wednesday opens, and as you can see here on Wednesday, we did in fact take Tuesday's high and Monday's high. Okay, so as soon as we see this on Wednesday morning open, okay, I was thinking, okay, so now with my bearish weekly bias, I now have opportunity to frame myself a trade. Now, what would I need to happen to get into a trade? And that's what I'm going to explain in this video, because one, I want it for myself, and two, I want to try and find out what the most high probability trade is in terms of time and time frame. Meaning what time of day is the best time to trade, down to the like an hour. So I don't really want to be on the charts for 3-4 hours every session. I want to be on the chart for an hour where I know price is going to be most probable to actually get me my setup. That's high probability. So with this in mind, now we sweat daily. Okay, if we drop down to the 4 hour, which I'm starting to find now, the 4 hour is super important, and I'm going to explain my reasoning, why my thoughts behind this is, and exactly what I'm seeing. Okay, so obviously here you can see I have this 4 hour level marked out. Okay, price today, let's just move this here for now, just to keep it out of the way. We know where price is. Okay, so coming into the session, you can see obviously we've got, where are we? Okay, so we're coming into the day. Okay, previously on Tuesday night, so overnight session for me, I don't trade Asia or anything like that. So we see we have this price swing here. It sweeps liquidity inside this 4 hour FEG. Okay, so that's the first part on the 4 hour that I'd like to see. Now, this session here, Asia, we pushed lower. Okay, we closed below the 4 hour level. So this hour here, 1 o'clock, so New York for us, New York sorry, London session for me started at 1 a.m. on the 4 hour candle. I start trading London at 2 a.m. Okay, so what do I expect to see? So if we pull down to a 1 hour now, okay, and we can take these levels off because they've been targeted or they've been hit. Okay, so what do we see here? Okay, so we're coming in. This is the first hour. Now, if I just draw this box out from here, or we'll pull a timestamp from here, and we pull it to the end of London here. Okay, that's a 4 hour period, as you can see here. So this is the 4 hour period I want to be working within. Okay, and this is the 4 hour period I want to take my trade for the London session. So knowing what price likes to do, okay, I want to use, if we have London open, I want to see price open, go higher if I'm bearish, continue down to the downside, and then obviously going to have a low and a close. Okay, so if we make that a bit more clean and clear here, I'll put it like this. So you can see we have 1 a.m. open. Okay, this is New York Standard Time, yeah? So we have the 1 a.m. open. We can pull that from there. Okay, 1 a.m. Then we see price at 1 a.m. push up to this level here. Okay, then price digs all the way down and finishes somewhat around this level, okay? So what do we see if now we pull this to the side? Okay, let's pull this to the side and see what we see, okay? Pull that there because we don't need it to be as long as it is. So we can see this is based on this 4 hour power of 3. We're on the 1 hour chart to make it clear. We've got an open at 1, price digs up, comes back and closes below on the 1 hour chart. This is the key to getting into the trade. This is the context of the trade, okay? We close below the previous hour's low, okay? For me, this here shows at this time, 2 a.m. in the morning, London session has started. We now going into 3 a.m. candle with a bearish bias based on the 4 hour chart has opened, started to continue lower. We want to be getting in on the second and third hour of the trade cycle. The reason for this is we've had accumulation, manipulation, distribution. We want to be getting in anywhere from here to run the trade all the way to the downside at where, let's say, we have these two levels here, okay? And this is a perfect example because this is exactly what happened today. Okay, so I can show this and I'll go over this all again, okay? So as you can see, London makes the high, not London, the 4 hour session that starts just before London now. So we got the high gets created on the 4 hour chart, and I'll show that as well. Let's delete this for now. So you can see this is the candle we're focusing on. This is the session, London session, 4 hour candle, okay? We see the high. This wick, this was created on the first hour of that 4 hour candle. This is the key. When you're bearish, you need to see price move back above the opening price to create an open high. Then you want to get in on the distribution towards the low and then get out before price retraces back on itself, as we can see it's doing around now. Okay. Why is it doing this? The liquidity level hasn't been reached on the 1 hour. Well, it has, because you've taken this level here, which I had drawn out previously. Okay. I'll put them back on the chart for the sake of it. You have this liquidity level here. You have this liquidity level here, which was New York's AM session low from the previous day. Now, you can target either of these. You can even target this swing point in here, and your main draw is this draw. So New York, if we've had this profile play out, we've now got a 1 hour FEG. If New York wants to continue and have a London continuation profile, we'll see price dig into this most likely, continue lower. Okay, that's another day's trade. It probably won't happen today. If it does, I won't be getting there anyways. So going forward and going back down now. So again, we know where price is and we know exactly what we're looking for. You've also got higher time frame confirmation. Okay, so now this is the trade that I took. Something that I wanted to have a look at, and a reason I'm looking into this trade more in depth than I would on other trades. Let me just pull this there. Okay, the reason I'm looking into this a little bit more is this price action here. Okay, so we can see this is exactly when I entered the trade. Okay, so what's price done? We know 1 a.m. is where price started, so we can pull it out. We're going to really analyze this chart and go over exactly why I got into this trade. So we see 1 a.m. open. Okay, let's just 7 a.m. Is it 7? Yeah, no, it's 6 a.m. So if we put where have we got? What have we got? New candle open. Okay, so new candle open. This is the start of our 4 hour. Okay, we're gonna note that down. New candle open plus start of 4 hour. Okay, so now we know that this is the start of the 4 hour chart. Now back to what I was saying about having a power of 3 and having an open high low close, which is what we was looking for. In order for us to execute a trade, we need to see price dig back above, which it does. Accumulates, manipulates, okay? Once it does this move back above the opening price, we need to see, okay, is price tagging into any higher time frame FVG or any reason for it to now push lower? It has to have context. It can't just be sweeping these two highs on the lower time frame and be going. It has to have context. When you see, now we go back, what can you see just here? Okay, it's perfectly clear. It's a lovely, lovely trade. This we see context. Okay, 1 hour FVG. Okay, and I made note of this exactly when it was going on. So just to be clear, I've got everything from this trade journaled. Okay, so if we make this visible on all charts below. The reason I was going to pull that back there is because when we go down, I don't want it to be miles away. Okay, and we drop back to that 5-minute chart now. What can you see that's occurred? So let's ignore the trade we actually took for a second, because this is the reason I'm doing this. We have the open, price digs below, pushes up, okay, manipulates into the higher time frame 1 hour FVG. Price then tags here. Could you take a trade? Yeah, of course you can, but we're not in London session yet because it's 2 a.m. start. We'd need a market structure shift at this level here. Doesn't happen. Okay, price plays around. Then you see London open just here, near enough where we started the hour before. Okay, price then digs back up again into the 1 hour FVG. Do we need to sweep this high? No, we don't need to sweep the high because that's an important level on the 1 hour chart. It doesn't really matter if it tags back in or not. At this point at 2, as long as we move back above opening price and price creates a market structure shift, then we're fine. Okay, so our market structure shift level would be here. Okay, and this is where this trade is going to start to get quite detailed, and the reasoning behind why I took the trade I took and not the trade I'm going to explain that you could have took. Okay, so market structure shift occurs and price starts to rally down. Okay, we see a market structure shift at 2:30, and then this little time period here. Okay, 2:30. So we do it from up here. 2:30 until 3 o'clock. Okay, we've got a 30-minute period. Now, why have we not entered the trade at this level here? Okay, so we got a nice FVG, perfect. You could put it here. I would take from that little tiny FVG, just have stops above this high. It should be protected anyways. So technically, we've got a nice 5-minute FVG, market structure shift, happy days. Price should react off that level. As you can see, funny enough, it does really perfectly bounce off the consequent encroachment. Okay, the reason I didn't take that trade is down to something that I'm trying to work on, something that I'm trying to find out if it's more probable to take the second trade that I took. Okay, so let me just clean this up a little bit. We've got the 1 hour, we know price tagged into it, and then we got this level where we're looking at. Okay, so the reason I didn't want to take this trade from here, which would have been this, I would have took this level here. Again, stops would have been above the London high. I probably would have just moved it above here for safekeeping, and you would have targeted 2R, and boom, it would have hit very, very easy. Okay, the reason I didn't take that and I took this is where I'm going to explain more in detail about my new sort of found time and price reasoning. Okay, and explain for myself more than anything, but this is why. So 235, 240, 245, 250, and 255. Price does tag in and does push away, okay, to the downside. Happy days, price is in a market maker sell model. Yeah, we know this. Look, you can see bearish PD arrays being respected, and all the way down, okay, until the draw on liquidity is met. Why I didn't take this is because the back end, the last 15 minutes of every 1 hour candle is very key to what the next candle is going to do. And when we go up here, again, we can delete this. When we go up here, you'll see exactly what I mean. Okay. So this was how the first hour of the 4 hours started. And we know that price wants to come lower. We have the draw on liquidity, 3 of them just here. I haven't marked this one out, but you can see it. Okay. When that little pushback at 2:30 happened, this 1 hour candle was above the low. Okay, and I'll show that now by drawing it in. Okay, I do have examples of when this happened live. So we pull that there, and you'll see. Right. Okay. So you see, this is the current 1 hour low that we wanted to close below to show us that price is bearish. When this pulled back, you can see 245, price is above. Now, if we entered this trade, this is a good example of it playing out well. It's something that I want to look at, see if it is high probability that it happens, or is it not, which is what's happened to me previously while I'm going over this. So 245, new 15-minute candles opening. When price pushes, if the candle continues to come up and closes here, we then don't have this level closed below. So without this level here below the previous 1 hour, okay, we don't have any context for a short. So the reason behind the trade that I took is more important based on the 1 hour chart. Again, like I said, to make it simple, if we don't close below here on the 1 hour chart, our bias might be in the wrong direction. And to save yourself getting burned and to save yourself getting taken out of the market, you want to wait for this level to be closed below. And as you can see, we do close below at 255. The first 3 a.m. candle is below. Okay, so we know now from this candle here, we know price is in a bearish market maker model. Now, one of the reasons that I took this trade was obviously based on we entered in this FVG or this FVG here. But something that I wanted to keep an eye on and something I want to note for my journal is we did sweep this liquidity level before we actually got an entry, okay? This level here didn't, well, actually, this level here did get swept as well. So we've had 2 levels of liquidity taken out the market, okay? So as I said live as well, and I've got it in my notes and I've got it written down, the worst thing that could have happened is that realistically, because once we know then this level and this level have been taken, price may not respect the bearish order flow if we're not bearish. We do, however, have the daily taken, the levels taken, 4-hour FVG, 4-hour power of 3 in sync with the 1 hour. So the 1 hour's created that open high. We're looking to catch the move down to the low. So we do have all these confluences on the higher time frame. So that's why I executed. As you can see, price tags into this FVG. I wouldn't pull this, but if you want to, you can. You can see that price taps into the 50% level of this leg. Okay, this price leg moves down, 50% levels tapped into, price respects it perfectly, and then crashes to the downside. I don't pull them, but I know they're there, sort of thing. Just from experience, I've been there and done that sort of trading style before, so I know. So this level was taken, okay? So now we know that once we're in, we've got this liquidity level just down here. And I always try and target a liquidity level that has at least 1R. Okay, you can see we just over 1R, perfect for our style and our strategy. And then the 2R level, obviously, based on having higher time frame liquidity down below, we just targeted 2R. More in depth on the actual trade, we got into the trade here. Price played around a little bit, could have respected this FVG, no market structure shift or anything to the upside, but I have seen price after sweeping liquidity levels just respect FVGs and push higher anyways. So we got into the trade, executed really nice. Price then gets to 330, starts to push to the downside. What do we see that's being created every time we get a new market structure shift down here? We have this level here, which is a FVG. Price tags into it just, then continues to the downside again. Price again creates another swing point, a new market structure shift area, pardon me, and another FVG. Price respects this FVG again. At this point, right here, we've now created our new market structure shift. Price should be then targeting this low, okay? And we're respecting the FVG in the bearish bias perfectly. So now my stops, I put it at break even once we had this leg here. From experience, I don't expect price to be going back up here. But if you're going to trail your stops when you're starting off, maybe wait for this leg to then push through the 1% level really cleanly to then go break even. Because realistically, if price did come back up here, it could react again. It could take out a lot of people like myself who move their stops. But with the higher time frame context being so bearish, I wasn't worried about that at all. Okay. But then it could happen. So once you see this leg here and then this push down, this was this 4 candles push to the downside. You could then move your stops to here if you wanted to, or just move into break even. It's not really a big deal either way. It doesn't matter. Okay. Then it's a risk-free trade. You've got nothing to lose. Then, as you see, price continues to respect the bearish order flow. and continues and hits take profit. The trade ran for a total of 2 hours and 20 minutes, which is just about perfect for my trading style. It was within the London session, just a little bit after. Again, like I said, we did want to get the manipulation part, the distribution part of the 4-hour candle, which we did. So you can see this is the 4-hour chart again, very simple. And this is the leg, and this is the move that we caught down. Okay, price did then run down a little bit more in this candle here on the new 4-hour, and now it's playing around. It's probably going to create a new 4-hour FVG, and then we'll be looking for new trades another day. As I've explained before, what price might do, as we've had this happen on the 4-hour, boom, happy days. What price might do now, we still have levels to target. Let me quickly pull that back up because I can use that. We still have this is the current day low now, okay? This could still be targeted if we're still bearish indeed. But we have a nice 1-hour FVG, which for me, personally, at 1 or 2 p.m. UK time, I would then look for the new 4-hour candle, which will open, which is going to be at, so it's going to be in another hour, so 2 o'clock. I would then look at 2 p.m. UK time or 9 a.m. New York time for price to then dig into this again, creating the same formation, the same sort of pattern, the open, high, low, close. And what I mean by that is on the 1 hour, we're going to have another candle. We probably won't do too much. Okay. Then we want to see price open first hour, so 2 to 3 p.m. UK time to dig into this 1-hour FVG. Then once we do that, you look for your lower time frame entry, whatever it might be, order block, FVG, whatever it is, price then to create another distribution leg to the downside, and then you be making your profit, getting out your trade, and being done for the day. Okay. Now, this is what I would look for if I was personally going to trade it, and I will update myself on if this played out. I do personally believe this will play out if price is still indeed bearish, but as far as I'm concerned, that trade that I took today is perfect. Now, something that I want to note for myself in this video is more the fact that on the 1-hour time frame, we need to be sort of in sync with a 4-hour chart. Now, we know the 4 hours had the liquidity sweep here. Price didn't close below this level here, and that's why I wouldn't be involved in any price action in this leg. Okay, and what I mean by that is we've closed back above price. Okay, even though we swept, it should go lower, and I expected it to go lower. The reason I'm not again entering at this candle is 1, because it's not in my session, but 2, let's see if price is indeed going to go lower, because if we have a close below the level, every candle, if you close below or above the highs after a liquidity sweep or some form of liquidity sweep, whether or not it's on the 1 hour, the daily, or the 4 hour, once you have that confirmation, you can start to make your bias up. You can start to see, okay, where do I think price is going to go? Then you just get confirmation. 4-hour chart, cool, we closed. Going into the London 4-hour candle, we know then we've already had a close. We've had a market structure shift. Price is tagged back in now. It's all time and price is all fractal. You can see, look, low, high created. This is a 4-hour candle here. Then we see a market structure shift. Price tags back in and continues lower. Price is going to do the same thing most likely here. We've taken these levels. Price has taken liquidity with displacement. What's it going to do? Well, it wants to pull back. We're never going to see major volatility in the time between London and New York AM. Okay. But at the start of New York AM, you will see some sort of push, which we're getting. And then once that 4-hour candle starts, that's where the money will be made. And that's why, for me, I'm going to put it in here because this is something that I've noticed. We have the 1 a.m. So we base this New York time. So this is UTC -5, as you can see on my chart. 4-hour candle is 1 a.m. to 5 a.m. NY, and that's London session. Okay, this is key. You want to be getting your trades based on price during this time. Okay, you don't want to be trading between 6 and 9 on New York time because it's nothing there for you. There's no point. You wait just like ICT and anyone else that's taught you, or any mentors would say, you need to wait for time and price to align. Okay. Then New York session, you can go New York AM session. You would be trading at a time of 9 a.m. till 1 p.m. New York. Okay. That's the New York AM session. And again, you want to be using this session time here. So when you see it open up on the 4-hour chart, let's just quickly mark this here. Let's leave that there. So when you see this open up, so the new candle, look, 9 a.m. is going to start, 4-hour chart. We're going to have a 4-hour FVG just above price now. And the reason you wouldn't get in on the back end of this hour here, so this is the last hour is going to come up in 15 minutes at 8 a.m. You're going to have the last hour of this 4-hour candle. What can we expect? Well, it's had a low. Now it's creating a high. Most likely this 4-hour candle is going to pull back and finish around this level. Then this next 4-hour candle, we want to see an open, high, low, close. And you will see that happen in these sessions. And something that I want to get more in depth about, and for my own knowledge, is how can we know the time and the price levels that are going to be most probability for me to get into the trades and to make money. Something I've been working on recently, as you can see here, is just having my times and everything written down. Okay, I have every time of every trade based on the minutes, and I'm trying to keep a knowledgeable sort of entry time. As you can see here, and I believe I made 5% this week. You can see most of the time I'm entering at the start of sessions. Okay, I'm very, very rarely entering the back end of a session. I'm not even sure if I have. So the latest 28, oh no, 140 here, okay, and it was a loss. So it's something that I'm trying to keep an eye on, because I don't see high probable trades at that late in the hour. Okay, here again, latest one was at 8:30, and it was a win. Okay, what was this trade here? 8:10. So as you can see, the latest trade that I've took was actually that one that I highlighted at 1:40 p.m. Again, New York session, which isn't my key session, and I did in fact take a loss. So again, something to write down, something to go over, something to journal. Okay, look again, 142, and we took a break even. So the probability of having a high probability trade after the 3/4 of the hour's gone is, for me, quite low. Okay, so I'm personally not going to be taking trades that late, and that is exactly why, as I've shown here, I didn't take the setup that I explained. So why I didn't take this setup here, okay? Because as you can see, yeah, its price is very clean. Yeah, it moved really nice, and it did work out this time. But over a period of trades, I don't want to just be making money sometimes. I want to be profitable a lot of the time, more than I lose, okay? So you can see, yes, it worked out today, but this isn't high probability for me. This trade, however, was perfect, and it was high probability, and that's why you can see it's perfect. We had daily, we had 1 hour, we had 4 hour, and we had the confirmation on them higher time frames to indicate price going lower, and we still had the draw intact. Okay, so as you can see, the draw still is intact here, and I will again go over what happens in the New York session. But as far as that trade today goes, Euro USD, it was perfect. It's a top level setup, and something that I'm trying to work hard to only take them trades. Okay, so hopefully that clears up any questions or anything that I might even ask myself or anybody who watches this video. But if and when I come back to this video, there's your answers, and this is exactly how we need to be trading all the time.